So today I want to share with you the strategies, tools, and tactics that I use to go from a 450 really bad credit score all the way to an 800 credit score. So if credit's important to you, which let's be honest, it's important to all of us, lock in, take some notes. Credit affects every aspect of our life. It affects our insurance rates. It affects the ability to buy a house, to get funding for a business, obviously. It affects the monthly car payment that you have on any car loans that you have. It affects the ability to go to get higher education and pay for those exorbitant student loans, which may or may not be a good idea, but it affects everything. Actually, even with dating websites now, credit score is listed. And so obviously credit plays a monster role in everything. Now, that said, in 2008, when the Great Recession hit and my businesses were failing and my real estate investments were tanking, and by January of 2018, my credit had gone from a 680 down to a 450 credit score, where it stayed for quite some time. So if you're put into that situation, there's a few things that you can do. Obviously, the quickest way is to just start making those payments on time again. However, if you fall so far behind and you're in a bad position and investments are just not going your way, etc., you may be faced with the question, well, what should I do? Should I look at bankruptcy? Is that an option? If you are a business and you have business assets, etc., you might look at a Chapter 11. A Chapter 13, same thing. You're looking to stay in your house, you have a bunch of equity, maybe a Chapter 13. But if you don't have significant assets, I would actually think a Chapter 7 might be the best path forward, because that will wipe everything clean. So that was the option I went with. Chapter 7 wiped everything clean. However, a lot of those negative accounts will stay on the credit report. And so what you need to do at that point is you need to work with credit repair or different DIY efforts to get those negative old bankrupt accounts washed off and knocked off your credit report. That's step one. Step two is now you've actually got to build good credit. I see a lot of people, I just need credit repair. Well, hey, credit repair will help for sure with some of those negative inaccurate items, but afterwards you still have to have good credit. If you don't have enough good credit, you're not going to qualify for any financing, period, even if you get the negative items off. So let's unpack this. First, building that good credit. That starts with usually a credit card, and maybe it's going to be a Discover, a Barclays, a Capital One. Those are kind of the three credit card lenders that are really good at helping you rebuild credit. It might be a $200 limit, and so that's what I did. I started with some of those starter credit cards, $200, $300, paying annual fees, getting, just beat up a little bit. But what happened is over time, those limits started to improve. They got bigger. As you have bigger credit card limits, that opens the door to an increased credit score. So again, step one, get the negatives off. Step two, start building the strong credit, and then you slowly build up more credit cards. Now, you don't want to build up like the store cards, the Kohl's and all those different store cards. Those don't really help much, but major creditors like a Barclays, Citi, Chase, Bank of America, the more you can get a major credit card and slowly build that limit up. You don't need a lot, maybe 2 or 3 of those accounts, and all of a sudden you get a credit card up to a $5,000 limit. That's step one of rebuilding, getting that strong credit. Step two is you've got to get some loan history. Credit cards is one credit type. Now you need to get loan history. That means car loans. Even if it's a $5,000, $10,000 car loan for a car you don't love, that's a great place to start. And that starts to rebuild loan history. Once you have those two pillars, and over time, usually within 3 years, you can start to get a mortgage as well. Now, once you have all 3 of those accounts, now your credit really starts to strengthen up. And then you start focusing on utilization. If you max out those credit cards, your score is going to tank. So try and keep those credit card balances low. Try and only use credit cards for things like business, things that actually generate income for you. Delay your gratification. Don't go throwing money on credit cards to go on vacation and buy furnishings and things that do not make you money. You really only want to use debt to make you money, or get basic things like a car and a house. Those are things that make sense. Next, it's all about consistency. You need to have a weekly money date. That's why we launched the My Figures fintech app to help small business owners manage their cash flow. In that application, we have what's called a weekly cash flow money date, where you go through and you look at your credit report and you look at your business and your personal accounts and you look at your debts and you look at your money coming in and your investments, and you start to pay attention to these things. That weekly money date, if you're not having a weekly money date, looking at your credit and your money situation, then it's going to be very difficult for you to succeed. And then at the end of the day, the more you can build up business credit, separate the business and personal assets, credit, loans, lines of credit, credit cards, business and personal, that's going to put you in a strong position. Those were all the steps that I took to go from a 450 terrible credit score all the way up to an 800 credit score. And it's a journey, it's a process, but that's how you can do it. Come on back, share this with other entrepreneurs, and let's win in 2024.